Welcome back to Reform Millennials, a podcast where we discuss the intersection of markets, politics, and pop culture. Please remember that the content of this show is for educational and entertainment purposes only. Nothing should be considered financial or tax advice. Please consult a professional before you make any investment decisions.
Okay, good morning. How's it going, Joel?
Very well, thanks. Nice to hear your voice, Mel. How you been?
Yes, I've been good. Yeah, I'm into what I'm referring to as focus girl fall. I don't know if you saw my LinkedIn post recently, but I do love summer, but I find that fall is just, it's my birthday in a few weeks, but also I just like the vibe of like back to school and getting focused on what's going on and back in government and going on in the markets and everything. It just feels like it's nice to get back into a routine. What about you?
So I'm of the age where a lot of my friends have kids that are starting out in grade 1, 2, 3, 4, and they just did their back to school shopping at the end of August.
Fun.
So fun, right? I never cared for it. Now,
personally, like when you were a kid?
I didn't care. And now you see the separation between the types of people, right? You have the focused girl fall. Yep. And then you have people like me who just care about sports and finally getting to see their friends maybe. And even I have a little bit of anxiety going back to school. And then you have the kids that just love going supply shopping and getting prepared. So I will say now that I'm like a business owner and I have to be an adult, I quite like the end of summer and the beginning of fall because it's the end of chaos.
Yeah, totally.
Right. And
like you feel justified. This is what focus girl fall is. You feel justified in being like, I'm sorry, like I can't go out and do random things multiple times per week. Like I'm actually focused on my priorities for this quarter. Yeah.
And I find for myself, it brings a level of calm. The household feels like it's back together again because it's just been, as I say, chaos for the last 3-4 months. And so I'm thrilled for it. Some people love sweaters. I don't care. It's more so the back to structure and a schedule and a routine.
Yeah.
You know?
And consistency. So I love that. Yeah. I can only imagine that like your house gets so cozy around the holidays. Like I'm sure Adriana around Christmas.
Fireplaces everywhere.
So good. Yeah. I love it. That's so exciting.
100%. So I think what might be a good idea, Mel, is let's talk about what we plan on doing on a biweekly basis with the show and how we plan on rolling it out. So at least for me, I feel as though with my past podcast, I was doing this weekly market update. I really missed doing it over my maternity leave, let's call it that, or paternity leave. I'm happy to finally kind of re-engage with you and start to do this on a regular scheduled basis where I can talk about markets. I can get updated from you on politics and on the goings-ons of what is happening across our country. And I think what it does for me is it reasserts this focus, and my performance from a job perspective, investment perspective, gets so much better. My engagement with the community, with our country, with my clients is better. So I'm very excited to finally have this schedule and to, I would say, learn from you a little bit.
Focus finance fall.
I'm not sure I don't know what the focus girl for me is, but I'll take it.
Yeah. No, it's going to be exciting. And yeah, we're really excited to participate in this too, because I think like one of the things at Pocket Lobbyist, which is one of my companies and my consulting company, MC Consulting, one of the things that we try to do and offer the clients that we work with and the people who have our membership and are engaged with us is politics. I think can sometimes feel like this isolated sector that's just sort of unto itself. But politics is part of everything. And I think that if you do want to continue to understand, not you, but anybody, if they want to continue to understand what's going on in markets or in the economy, this is just a really important intersection. And that's really how we try to frame our advice and how we interact with things. So I'm excited to have this overlap because I think there's a lot going on and it'll be good to track. So yeah, I think for those listening, you can expect these chats bi-weekly on Tuesday mornings, live streamed. And then I think they'll come out later on in the week with some supplementary materials through a newsletter and an official. If you don't watch it live, you can watch a recording of it after. Is that sort of, am I missing anything? I think that's
No,
it.
I think you're right. I believe that the two topics are so incredibly correlated now. You have, and I think you say this very eloquently, it's political risk is now business risk.
Yep.
And in the past, I feel as though most people kind of chalked up policy and to be separate of business, and that business wasn't impacted. However, I think if we've learned anything over the last 12, maybe 15 years, the speed at which markets change and the speed at which I believe like culture and social contracts evolve, it is just impacting more and more our business lives. So I'm very happy to finally have this bi-weekly conversation going, and yeah, it should be good. I think it'll be valuable to those that are listening.
Hopefully,
so,
yeah.
With any luck, if it isn't, we're just going to stop. So
no, we won't stop. We both like the sound of our own voice way too much to stop. We just will have like nobody listening.
That is ultra true. Probably more so me than you. But I suppose to start, I'm gonna run with a rant. The market itself is on fire. When you look at the annualized returns for both the Toronto Stock Exchange, TSX 60, the S&P 500, the NASDAQ, the Dow, even when you start to include Europe, markets have done incredibly well in the face of a lot of political volatility. And if you would have guessed come January, February, listening to the rhetoric from Donald Trump, the impact it had on our federal election and ousting Trudeau and pushing Carney into power, you would have guessed that the TSX would be down this year. You would assume that these massive threats and tariff negotiations would cause businesses to slow down investment, to slow down from an expansion perspective. And hilariously, the opposite has occurred. The TSX is, as of this recording, up well over 15% this year. The S&P 500 is nearing 11. The NASDAQ, let me take a peek, up 12.7, all from being down in February. That is quite the shift. We've seen a massive rally behind new policy, behind a new normal. And I think what has resulted for me in getting back to what I would say to be a more structured routine and chatting with clients, talking to prospects, I'm noticing that folks are feeling a little bit uncomfortable because they feel as though things are going too good from a market pricing perspective. And what that tells me is that there is a dislocation between the economy and the market right now, where folks that are in mid-market, I'm talking small businesses, people that are employed at larger businesses, feel as though the economy is not doing as well as the market is screaming. And that always, to me, perks my ears a bit. So I have this need to manage a portfolio that is diversified across a number of sectors. You have a global portfolio of stocks, you're invested across the planet. You have a reality, though, where the current narrative is artificial intelligence, large language models, data centers, this massive technology paradigm shift that is largely driving stocks higher, while I think leaving a good portion of the regular mid-market behind in the dust, so to speak. And investors are ignoring the economy and participating in this new paradigm. And I think justifiably so, these markets are doing incredibly well. But it does push me to start to look into what's going on. I had a conversation with a good friend, a real estate agent locally, and he was speaking to the housing market broadly across Canada, where he's seeing certain rental market, or I should say condo markets in Toronto that are down 30-40%. You have pockets of Calgary that are seeing prices reprice down 5 to 10%. You have pockets of Edmonton that are down 3, 4, 5%. This tells me that there is a slowdown. Now, this is traditionally the case. There is the September curse in stock markets and in our economy. And largely, this is believed to be because managers, people in control have returned from their summer vacations. And they are either selling, they're rebalancing, they're starting to reassess what they have been doing for the last couple of months, or their underlings have been doing for the last couple of months. And like where there might be some truth to that, I think that there's something else there. Recently on Twitter, there was this post that talked about the fraction, or I should say the fractured US economy, where there are have states and have not states. And it is becoming quite concerning, where you have at least 70 or 65% of states that are nearing recession in terms of GDP growth. And then you have states, so Texas, California, Florida, New York, the Carolinas, that are on absolute fire right now. And they are driving their economy forward. And this is this K-shaped reality. So from an investment perspective, you need to take that into consideration. I know that I am. There's a quote from Howard Linsden that I really like. Panic first it's better to panic first than it is to panic too late. And I think considering these economic points that I'm drawing people's attention to, I think it makes a lot of sense for folks to reassess where they're at. I believe that this is something where I'd like to get a little bit of feedback from you, where I'm seeing markets do very well. I see a ton of capex, justifiable capex in many regards, with that are pointing to data center build out, to AI and its infrastructure / integration into large enterprises, and how it's producing incredibly, I would say, meaningful results from a productivity perspective, new product lines that are being sold to companies like mine at RBC. I think that there is a lot of power there. However, that doesn't change the fact that there are those that feel as though they're falling behind here. And is there any sort of policy coming in behind this to address this K-shaped economy, this K-shaped reality? I know from my point of view, I'm having conversations with people that are wondering what's going on in Canada politically. The US is so darn loud, but man, I haven't heard anything. So Mel, if you wouldn't mind, kind of give us a where we're at in terms of political landscape.
Yeah, no, I think all of that is super interesting. And I know we're going to get into talking a little bit about the specifics of that when we get to our discussion after. So I've taken a few notes. I'm going to follow up with you on a couple of things. But I think from a political perspective, back to school, September also marks back to session for legislators, across Canada. And on the federal side of things, those MPs that were previously back in their constituencies and their communities are going to be back to Ottawa on September 15th, which is on Monday, so just a few days away. And they will be back at Parliament in question period, debating and passing legislation. So one of the things when we look at the sort of back to session, back to fall overview that we're expecting to see. So a few things sort of just as an overview to note. So this is not the first time that the Parliament is back in session. Parliament was back this spring for a brief session, which you may have seen some of the legislation like C5 and some supplementary supply bills come through as well. One of the things that we're going to see that's a little bit new this session is we're going to see Pierre Poilievre back in his seat as opposition leader. It was Andrew Scheer who was in that role temporarily because, as we know, Pierre Poilievre did not secure his seat in Ottawa when the 2025 election happened. And so he now has secured a seat in the August 18th by-election. He's now the MP in a riding in Alberta called Battle River Crowfoot, which is a pretty large riding on the east side of the province. And so he'll be back in his spot as His Majesty's loyal opposition in that seat. And the reason why that's important is because we are going back to a parliament rather, that is still in a very fragile minority state. So even though the Liberals elected 169 MPs, we have to do the math. 172 is a majority. They didn't quite get there. And they actually only have 168 MPs because one of those 169 MPs is a speaker that doesn't vote. And so you have 168 functioning voting MPs for Carney's Liberal government. And then you have 144 Conservative Party of Canada MPs, and 22 Bloc Québécois MPs and 7 NDP MPs, which doesn't even reach party status. So the interesting legislative and parliamentary dynamics we're going to look at starting on Monday really have to do with how do the Liberals manage this very narrow government minority that they are going to need to use and keep together to pass legislation. So that's one thing that I'm going to be watching for, is just how close do some of these votes get? What kinds of compromises do the Liberals make to make sure that they can pass their agenda? And one of the major pieces of it itself is not a piece of legislation, but it's sort of an event. As many of you will know, we did not have a federal budget in the spring because we were in an election. And so we are going to see a federal budget, so Budget 2025, which is essentially the fiscal plan from April 1st, 2025 to March 31st, 2026. We will see that fiscal plan introduced and tabled this fall in Parliament. And some of you may be wondering, well, how can they do that so late? There are mechanisms within government, which we can get into if anybody is interested, but there are mechanisms within government that allows government to continue to fund operations. So when we look at all of the ministries of government and we look at Parliament, we have the separation of powers, and these are two separate things. And so in order for government, the executive branch, to be able to spend on programs, they do need that legislative or parliamentary authority, and they received that this past session. So that's really the authority to spend, which we can get into talking a little bit about, but there has been no plan tabled in terms of what the Liberals are going to do with finances for fiscal 25-26. And so we expect to see that this fall, which I know a lot of people will be paying attention to because we just didn't see a budget this year. And it'll also be the first one that Carney oversees. And so I think on the budget side of things, we can get into talking about what Budget 2025 will look like. But I think what we're really sort of looking ahead to is Budget 2026 in the spring. And I think the key thing to take away, and we may see some of this introduced this fall in Budget 2025, is that the Carney government is going to take a pretty fundamentally different approach to budgeting if they do so in alignment with what they've promised. The key thing that they're going to do, or that Carney and his administration have promised to do, is to balance the operational budget, and in so doing, cut operationally. He's asked ministers to come back to him with plans to cut as much as 7 to 8%. So we are going to see operational cuts across the federal government, but we are going to see likely some pretty significant capital investments. And so by way of accounting, you're going to see the Carney government seek to balance the operational side of things and make strategic investments on the capital side of things, which to the taxpayer, there's only one taxpayer. So we're still probably going to see deficits. We still have a mounting federal debt that we're going to have to be concerned by. But I would say that we can get into some of the other sort of pieces of legislation, but I would say just broadly speaking, in the back to session vibe, that's really what I'm watching this fall and into the spring. And I've got a couple of things I want to touch on as well on political climate and some of the specifics of budget, but I'll maybe just leave it there to open it up to our discussion.
So back to session, I think from my perspective, I'd like to kind of chat through the Canada-US situation currently.
Yeah.
And then move from there from a topic basis.
Yeah.
So as of now, it feels as though we've had very little news with regards to our engagement with the United States. In the reverse side, it's almost as though every country on the planet has struck a deal with the United States. And that leaves us last. However, interestingly enough, we're in this position because, and I think we've waited because we have the USMCA, we have we have the least amount of exposure to headwind tariffs. So now you combine that with a very recent ruling of Donald Trump's tariffs being, or possibly being, illegal, where they're likely going to be seen by the Supreme Court Q1, Q2 next year. This then puts us in a position that I think was actually quite strategically brilliant. It has been a good idea to delay. If you would have asked me in February, I likely would have said, shoot, we should probably be first to the table. Where do you see us now?
Yeah,
Canada
I have a few thoughts on that. Yeah. Okay. So, I mean, the petty part of me that has voted conservative mostly just has to say this, because I mean, I'm only human, but like, wear our elbows up. We have none of the retaliatory tariffs that were basically the cornerstone of why Carney won the election, for sure, among that plus 50 cohort of people who stated US-Canada relations and fighting Donald Trump to be the number one concern. We don't have elbows up. I actually think that's the right approach, and that's strategically what Carney should be doing. And I commend he and his government for taking that approach, because to me, removing the retaliatory tariffs that we had in place and turning down the temperature, or I guess in so doing, attempting to turn down the temperature, does have the effect of placating to Trump a bit, which is that is the strategy that we need to use. Like, we can talk about whether or not we like that strategy or not, but it's the reality that we're in. We are hugely exposed to the United States and depend on them incredibly. So I would just say the political strategy that was sold to Canadians to make them feel better about what was happening between US-Canada relations is not the current strategy that the Carney government is adopting. And I actually think it's the right strategy, but just to be fair, because we're going to talk a little bit about political dynamics later, this is very different than what Carney went to the polls on and how he campaigned during the election. It's the right strategy, but it's a lot different. I would say that a few things on USMCA. Do I think that, so USMCA, by the way, is up for renegotiation next year. So we have USMCA, but
not for long.
Maybe not forever or for long. So I actually think what Canada does in the next 3, 6, 9, 12 months is going to be incredibly important with that US-Canada relationship, because we live, and I mean, we've talked about this before, we live in a world where we take for granted peacetime norms, all of these things. You and I were children or not even born yet when the NAFTA came in the late 80s and early 90s. So we have not lived in a world where we do not experience free trade with the United States. And that has been our new normal. I would say that it would be a mistake to assume that is a foregone conclusion or that is absolutely going to happen. We understand our dynamic with the United States as being, I think we do take it for granted a little bit based on how I've seen us act. So I would say that, again, is it likely that we're not going to have some kind of free trade agreement with the United States? No, but it's very likely it could not look like what the USMCA looks like right now, particularly when it comes to certain provisions, on dairy, for example, right? So, or other things. I mean, I don't have any special knowledge of that, but we've heard how Trump talks about it. I would also say, so that's kind of the one side of it, of not taking advantage of the fact that we have this trade agreement. I would also say that we've seen Howard Lutnick and others talking about this. Just because we take away retaliatory tariffs and just because we are not technically being adversarial, I think that the Carney government needs to be very careful about how they're talking about Trump and the United States in the media. The Liberal strategy during the last election and leading up to the last election was to really fearmonger by pairing Pierre Poilievre and the Conservative Party of Canada as being like Trump, and to do so in a pejorative and negative way. I do think that Carney and his government are going to have to find a new strategy, because people in the United States listen to how Canada is talking about the United States. And I'm not sitting here wearing a MAGA hat saying that this is a perfect president or that there's nothing wrong. There are challenges, but this is also a president and a leader who takes note of when you're talking crap. And so I just would say that over the next little bit, especially as we enter these USMCA negotiations, that's going to be incredibly important. And I think that Canada needs to find a way to build ourselves up versus tearing the United States down if we actually do want to think about long-term prosperity. I can talk a little bit about some of the things that Carney announced on Friday in terms of some industrial strategy things that he has introduced in response to stabilizing the economy. But I would say writ large and as an overview, that's where the state of US-Canada relations sits at present. So this is Tuesday, September 9th at 9:57 a.m. Mountain. We know things change quickly, but that's what I would say about US Canada.
So I want to add something here that I think maybe folks haven't considered much. So if we were to back up 6 months, no, even more, 12 months to when Donald Trump was running for president in the United States, he was talking about making America great again, but more so reindustrializing America, bringing manufacturing back home. The actual reality of his first, call it 8.5 months in office, has not resulted in manufacturing returning home. Has there been a number of headline announcements of very large corporations talking about investment in America? Yes. Has there actually been dollars invested? Very difficult to actually count. He's talking about tariff revenue that's coming. Here's what I view his true policy position as creating. I am of the opinion that making America great again is nearshoring, not onshoring of manufacturing and industrialization. America is not going to make shoes again. However, I view what I would say is a retraction of military influence, of their sort of integration into emerging markets and less, well, I guess more broadly, Europe, a retrieval back to their home continent. And that is this nearshoring back to North America, where, sure, verbally and from a headline perspective, he is going to be tough on Canada. He's going to continue to be tough on Mexico. The strikes on drug cartels, et cetera, those things are headline news. But what I've noticed market-wise that I think folks are not seeing is that the reality is industrialization, engineering skill, labor is largely based in Canada. We provide a ton of that for the United States. I believe that the foregoing strategy of the United States is going to be the industrialization of North America. Mexico actually provides a discounted labor force to China and India. Most people are not considering that. One of my number one takes going into this year. Oh yeah. Well, not just fentanyl, but like a lot of other more so referring to, manufacturing of goods, cars, etc.
Chips, yeah.
What's happening now is, if you look at the stock market right now, it's almost always ahead of where people's heads are at in terms of what is currently happening, where investment is occurring, is Canada and the United States and Mexico are doubling, tripling down on their relationship. The business leaders are, because they see the value there. They see that the United States is pulling out of we'll call it emerging Asia, pulling out of China to a lesser extent, and they're industrializing locally. Our talent is getting put to work. Certainly, we have our own unemployment problems, but look at the stock market and stock prices. The TSX has outperformed the S&P 500. The broad-based index in Mexico is up 36% this year. And yet, coming out of the gate, guess who Donald Trump was hardest on from a tariff perspective? It flies in the face of anybody who thought, oh boy, we better sell everything. Think about incentives. Show me the incentives and I'll show you the outcome. Right now, you have cheaper labor in Mexico than you do across the ocean, across the Pacific and the Atlantic, depending on where you're going. You have very, very, very deep commodity ties to Canada, where you have cheaper oil than you will ever be able to import. You have a massive liquid natural gas program that is being incentivized by the federal government in the United States, where they're shipping out that energy and importing ours. So if you really are ignoring the noise, ignoring the headlines, and taking a deep look at the actual business outcomes, it's very clear that business leaders in America are deepening their ties to Canada, deepening their ties with Mexico. And if you're a business leader, I think you should be considering that. Now, with that said, that does not change the fact that the USMCA and the renegotiation is incredibly important. And it's very likely that it's going to look a lot different than it did when I think Lighthouser and Freeland negotiated it back in 2017 or whatever.
Yep.
And the incentives are different. The economy is drastically different than it was back then. And I think that we have opportunity to adjust what we are protecting at home and taking advantage of what we're great at here, while also recognizing that, yes, he's loud, he's mean, he's not a very great person, it seems. He seems to hate us. But the reality is that they need us. So I guess from my point of view, and what I'd like to throw back at you is I'm seeing prices change, which is interesting to me. I think that there's a lot to be said about that. However, where are you seeing this government focus as they return to session, as you kind of look at immigration and policy, how you see the political climate? Because I view the current price reaction to what's going on to be different than I think if you were to look at the top issues facing Canada, So
yes. Okay, so much to unpack there. I don't know if I want to necessarily open up this can of worms during this chat, but whatever, let's do it. This is a great book that I think everybody should read. It's called Lament for a Nation. It was written in the 1960s by a fellow named George Grant. And the whole thesis of the book, I just reread it again, because what George Grant is writing about, it's a very easy read. What George Grant is writing about is sort of pessimistically the question. He's basically questioning Canada's sovereignty in the sense of, I'm paraphrasing here, but a lack of Canadian nationalism or uniqueness is going to eventually result in Canada just being part of the United States. This is not my perspective. This is not my view, but what you're saying is very interesting because markets do respond, obviously, to public policy, and borders are considered because if you're looking in a developing market versus a developed market, like it's different, of course. But one of the things that I wonder about a lot now is the extent to which some of the social and policy breakdowns that we've had in Canada are frustrating the population and the electorate to the point where markets may be performing and things may be doing well, but is that in the scenario where we have the same relationship that we have right now, where we have the same level of sovereignty? You were talking a lot about earlier, and this is what really made me think of it. You were talking a lot earlier about how the United States needs us, and that's great. And I think it's true, but there's a difference in relationship between a partner and like a mercantilist jurisdiction. I'm being a little dramatic here, but that's not the same type of relationship as two great powers collaborating together. And I think that that's something that we need to watch domestically here in Canada in terms of how that shakes out for us, because being needed is great, but the nature of that relationship is also very important. And if you don't have leverage and you don't have actually the ability to dictate or force terms on that, then you're not it's great that they need you. They're never going to not need you. But how much autonomy and power do you actually have in that relationship? And what does that mean for Canada? So I don't want to get into this whole separation discussion, because that's not a thing that I think
I don't think that's on the table in the next decade, but I do believe that you
But
strike
yes.
a tone that matters. And I think you're touching on something that comes to, okay, how much negotiation leverage do we have next year? And where is it found? In the past, it's been commodities, right? Do we still have the ability to protect our major industries like banking, to a lesser extent, dairy? I would argue that we have the ability to leverage a certain side while having to cede another. Do our insurance industries and that finance sector, does it continue to see regulatory protection? Now, that's where I view this interesting year ahead, where there's going to be a lot of, I think if anything that's promised, there's going to be a lot of changes. America's dependence on us, I think, might actually deepen. However, what they're dependent on is going to differentiate, and what we have to give up to strike that deal is going to be, I believe, different than it was just 7 or 8 years ago. So I think you're making a really important point there. And given that this is being negotiated during Trump's administration, during a period of time where they're going to be going through midterm elections, I think there is an opportunity there for Canadians or our politicians to leverage that reality. However, what does that look like? We don't have a lot of political pressure from this being an election year, et cetera. Maybe I'm wrong. You please correct me, but that actually puts us in an interesting position. They currently control all 3 houses. Now, that could only be for a very short period of time. And that'll be during this negotiation. And that to me is exciting and interesting all in the same. So I don't know, I want to throw it back to you there. And we can talk a little bit about that, specifically the timing of the USMCA negotiation, where you see the opportunity for us. And then we can, I think, hopefully touch on maybe immigration and population after that.
Yeah. So, I mean, I think the formal negotiations begin in July, if I'm not mistaken, of 2026 for USMCA. But of course, that they're going to be, I mean, the negotiations have already started in the sense of like everything that's happening in these conversations is going to lead into those discussions. So you're correct. The midterm elections in the United States, where we'll have congressional seats turnover and about a third or so of Senate seats turnover, are going to matter. And they're going to matter in states where that relationship with Canada is really important. And I mean, even just in terms of like tourism dollars and whatnot of Canadians saying elbows up, like those things definitely will matter. I think that part of what we can do as Canadians and part of what we can encourage our elected officials to do really at every order of government, because we pick on the federal government here because that's the sort of top line, but there's a role for municipal governments, which Alberta is having municipal general elections in the next couple of months, and then provincial elections as well in 2027. So there's a role for every order of government to play, and I think that role is to, in many ways, I don't want to oversimplify it, but I think it goes back to basics. The reality is that we are not in a situation where our level of GDP growth and economic growth can continue to sustain the public spending that we are currently engaged in. We have, in many ways, we can talk a little bit about immigration and population growth. We have to create more leverage in terms of our ability to be independent economically and to ensure that people are not voting with their feet. For as many people who are not visiting their vacation homes in Florida or who have sold them on the East Coast, I have a lot of friends in Toronto and in Ontario and out East who are completely frustrated by the way that crime and housing prices and all of these things have unfolded in large cities. And they're not selling their vacation homes in Florida. They're just moving there, or they're looking elsewhere for opportunities as well. And I'm not saying that's a large portion of people, but I think when we see, and maybe this is a good segue, when we are trying to develop this leverage in Canada in terms of the right people making the right things and orienting ourselves in the right direction, some of these specifics do really matter in terms of like, are we doing healthcare right? Are we doing education right? Are we incentivizing people to create and share and reinvest in wealth? Are we making it affordable for people to have a home? Are Canadians having children, right? Like we see population growth numbers, and we can get into some of the specifics here, but the mix of our population growth is really important too. So I feel like I'm just sort of rambling. I don't know if I answered your question, Joel, but I think it's back to basics and building leverage. Let's stop being so esoteric with like our values calculations and start being more tangible about what we're doing. And we should just be asking our governments to focus on those basic building blocks of don't try and get complicated things, right? Like we clearly do not have state capacity to do big complicated things right now. We need to work our way into that. Like let's make sure that government is there to at the very least have those basic building blocks in a row so that people can have that access to the basic building blocks of what they need to thrive and do well economically, which contributes to the whole economy. So sorry, it's a bit of a ramble, but yeah.
No, and this comes to something that I feel like I missed on my market rant at the beginning. I didn't talk about interest rates. I didn't talk about currency, and that
next week we'll get some.
Yeah, maybe next week. Yeah. But the reality is that we have this situation in Canada where our unemployment rate is starting to go the wrong direction. We have a continued, I think, Overton window expansion of what is annoying or even the highest of concern to our electorate. So I think was obviously it went from being, oh, Trump is number one. I don't believe his administration and Trump is number one anymore. It seems like that has fallen to 3. The economy and the rising costs of living have now surpassed that. I also believe that immigration is likely going to jump over top of Donald Trump and has been very quickly. And you combine that with housing affordability and accessibility, and you have a very large shift in political outlook, personally, and what we're paying attention to. And those are very, very base of the pyramid of needs. They're very much, yes, they've definitely fallen down from where we were just 7-8 years ago. And that is interesting to me. Climate change and environment has fallen significantly in terms of order of importance. The Chinese interference, these inequality and poverty items, it has changed their position in the mind share of the Canadian voter has fallen. And that means that our government has stopped delivering on the base of our Maslow hierarchy of needs because of their ascension into our mind share. So that's a very impactful thing. And that means that there needs to be policy change. And luckily, everything they're returning. So I think before we head out, I'd like to get your take on Alberta. A few things through the grapevine that have recently occurred, whether it be the specialist, the doctor specialist billing code. How do I put this? Result. There's a few things Alberta budget wise that I want to get your take on before we head out. So I just recently read an article that stated that we were going to run close to a $5.6 billion deficit in 25, or that's what they're expecting. However, I looked at the price point on energy and I just can't quite square that number. What's your take there?
They're actually projecting a $6.5 billion deficit, which is $1.3 billion higher than budgeted. So a couple of things. So they're looking at WTI being about $4.25 lower than budgeted in budget 25, and then $10 lower than budgeted in 24-25. A reminder that every drop in dollar of oil is $750 million to Alberta's bottom line in terms of revenues. So that may not seem like a lot of money, but a $4 drop is, 750 times, it's a few $1 billion. Sorry, my math is not great, especially when put on the spot. So it's representing about a $1.4 billion decline in resource revenues. So I would say that insofar as it relates to federal policy, this is due to uncertainty in terms of projects not having the kind of certainty that's needed to grow or go ahead, or for investment decisions to be made. And then also we've got several different union negotiations going on that contribute to the federal or the provincial budget as well. We also have seen pretty incredible population growth, which is putting pressure on infrastructure, schools, hospitals, those types of things. And I think it's also just worth noting that on the immigration side of things, as it relates to Alberta in particular, it is the federal government. Alberta is actually asking for greater control over immigration policy, like similar to what Quebec has. When we look at immigration being a federal issue, it's also oftentimes federal decisions that are provincial responsibility in terms of paying for things. And there is some transfer that comes from the federal government, but not nearly enough. Like there's a lot of examples from Ontario, et cetera, on housing where the federal government's not increasing their funding, and they're going to have trouble housing the refugees that they've accepted, et cetera. So I would just say that the deficit in Alberta, that's what it's projected at, is 6.5 billion, due largely to resource revenues, the implementation of the new tax bracket that we saw, union negotiations, and the infrastructure builds that need to happen, I would say. I mean, I can get more specific, but that's largely, I think, what we're seeing happen in Alberta.
Interesting. I appreciate you saying that, because I would have assumed we were going to run a surplus, given that we had $77 to $80 oil during the peak of summer. And now obviously we're down to about 62, 63 WTI. And I mean, it's trending one direction. It's part of the Donald Trump's weekly commentary that he wants oil prices and energy prices lower. So perhaps that actually becomes a reality, that deficit. But I also know that going into the winter months that it likely could reverse, and we could see 70, in which case we run a deficit that is nil and void and doesn't actually occur. So I guess from a commentary perspective, I'm very hopeful that this current Alberta government starts to consider investment in Alberta on a 10-20 year basis rather than a budget balancing basis. I believe that if we're going to continue to see the immigration numbers that we have, it is imperative that we start to invest in our infrastructure beyond what we've done from a LRT line.
It is imperative to invest in infrastructure, but I think what folks do need to be aware of is that money doesn't grow on trees, obviously. So if we want to maintain the current service level and adjust for both inflation and population growth and invest in infrastructure, there is not enough money for that. So there either needs to be clawbacks on service levels, or we need a PST, or we need oil to be at $100 a barrel. And we don't control the last one. 80. So yeah. I hyperbolize, but I just think like this is the core issue that has to be that Albertans have to decide in their minds. Albertans, you know, I think I've said this before on the podcast, Albertans think of themselves as very conservative. We are fundamentally not that conservative from a fiscal perspective. People still have very high expectations of what they receive in terms of public compensation. Services. Exactly. And I'm not saying that that's wrong. I'm just saying that that's a reality. And so we either need to be okay with some clawback on that. We need to look at how we're collecting revenue, or so PST. I mean, I don't want a PST. I'm just saying like these are the levers that we have, or we need to accept that there is going to be some decrease in service level. And so that's all I would say in terms of how Albertans think of this fiscal situation.
Okay, awesome. Well, Mel, I think we've touched on most of the items from our notes. For those that are still watching and for those that watch afterwards, I would implore you to send in questions if you want them addressed on a bi-weekly basis. I really enjoyed this conversation. It always refreshes kind of where we're at, and I'm appreciative of your time, Mel. I really do love having this chat. For the next couple of weeks, we're going to be doing something very similar, and I look forward to having this conversation. I'm going to touch on interest rates, on housing, and where the economy is going to head into the end of this year, Canada, and more broadly into the US. So tune in for that. Mel, where can we find you?
Oh gosh. Well, it really depends on what you want, because if you want our political stuff, you can go to Pocket Lobbyist. If you want my back to school outfits, you got to follow me personally at mel.coa on Instagram, which I know are just like, I'm an aspiring influencer. If this economy goes completely to crap and nobody wants my advice or my thoughts anymore, you'll see me edging to try and make money being an influencer. I mean, I think there's a market in it for me, you know?
Hey, yes. I think you could make something happen there. I wish you the best of luck. I, for one, will not be able to pull that off, and I'll likely just be a stay-at-home dad. But in any case, you can find me, Joel Shackleton on Twitter, or Reform Millennial on Instagram. Outside of that, if you're looking for financial advice and portfolio management, check me out at Joel Shackleton, or rbc.com/Joel Shackleton. Mel, thanks again.
Cool. Have a great week. See you later.
That's all for today. Thanks for listening. If you found this valuable, please subscribe and share it with a friend. As always, the information on this podcast is for educational purposes only and should not be considered financial and/or tax advice. Please consult a licensed professional for your own personal situation. Joel is a registered portfolio manager and investment advisor, and clients of his and his firm may own securities discussed on this podcast.